So today we're going to go through the top 3 things that I really wish I knew starting out that would have helped me scale to $1.2 million way faster than the amount of time that it took me to actually do it. If you're here for a highly edited and exciting video that's going to make you, oh my God, look at the screen and say, wow, that looks so cool, I'm not the guy for you, and this is not the video for you. But I have a little sticky note here of the top 3 things that I wish I knew starting out that I really think that it's going to apply to a lot of people. And if you really understand these 3 things and you implement them in your portfolio right now, you'll probably see some form of success. It's not going to be buy this stock, buy this call option, do this or do that. This is going to be high level things that I'm going to break down for you if you implement them. And if you understand that, me coming from me to you, I'm telling you that I would have scaled to $1.2 million much faster. And I realize I haven't done a video in a few months showing you my account value, but this video is for that right now. A lot of people have been DMing me and posting in the comments, what's your account value right now? It's roughly 1.2 million now. It's growing great. I realize that everybody's a genius in a bull market. Everybody's making a lot of money right now. I get it. But we're going to go through a couple things. I'm going to talk to you about valuations a little bit. I'll talk to you about a little bit of allocation that I'm doing in this account. But the main purpose of this video, which I'll finger that stuff in, but the main purpose of this video is the 3 things that I wish I knew sooner. So let's just start off on number 1. And that is that most people are stuck in the sub 100K account value, so below 6 figures. And you're going to be like, well, obviously you got to get to 6 figures before you get to a million, Brandon. But my point is, a lot of people maybe start with 20K or start with 50K or even start with 100K, but you just feel like getting to the $1 million level is just not achievable. Maybe because you're swinging for the fence. You're buying call options on something that is highly risky and you shouldn't do it. You're selling options. You're getting over leverage. You're experiencing market volatility, and your broker is forcing you to sell things when they're cheap in price because you're getting a margin call for whatever it may be. So when most people start out, they realize that, oh my God, I just got to grow as fast as I can. I'm going to take all the risk that I got to do right now. And then once I get a bigger account, I'll slow down, I'll take less risk, and I won't really worry about it that much. But the problem that most people do is this, and it's kind of like a gambler that goes into Vegas. And you guys all know I live in Vegas, so I see that obviously the Las Vegas Strip is there because of losers, not because of winners. And most people in the stock market, they're gamblers just like people are on a Vegas Strip playing slot machines or whatever it may be. And it's that maybe you put in $10,000 into an investment. Maybe you double up. You go from 10K to 20K. Great. But most people don't really understand the whole mechanics and the risk that they're taking beyond that trade of, well, I went from 10 to 20. How much risk did I really take? Did I get lucky? Was it skillful? Is this repeatable? Most people are going to say, well, I did it. I could do it again. I'm great. I'm skillful. I'll do it again. So then they try to take their 20 and take it to 40K. Maybe they're buying call options right before earnings report of a highly volatile company. Maybe they're just swinging for the fence on whatever trade it may be. And usually what happens is they get decent momentum starting out. But then once they get to that 50 to 100K level, they make a bad play, they over leverage, they put too much exposure into one play, and they usually get wiped out and start back over at zero or pretty close to it. Because you guys got to understand, April the market fell, what did it fall, like 25%? Of course, the valuations were a little bit lofty versus historical standards, and right now they kind of are too. But when you have lofty valuations and you have an uncertain time, expect to have downside volatility. Not saying the market's going to crash and stay down, but it's not really a time to over leverage in a time like that. So when you have these people that keep trying to take on extra risk just to get to the 1, 2, 3, 4, 5, $1 million level, they really never get to the $1 million level because they're stuck in that sub 100K level because they just keep making the same mistakes over and over and over again. I know you watching this video right now, maybe you want to click off because you know this stuff. I get it. But if you don't have a 100K account, you're probably making these mistakes. If you don't have a $1 million account, you're probably making these mistakes too. Maybe you're not making mistake number 1, but mistake number 2 and 3, I bet you that you made one of these mistakes for sure. So I think that if you stick around, you'll get a little bit of value from this video. Maybe not a lot, maybe whatever, but I'm just speaking off the cuff right here of what I'm feeling right now in the market. And I just feel bad that a lot of people do a lot of right things, but in the investing world, if you do 99 things right and one thing wrong, that one thing wrong that you do could just eliminate all the right things that you did. So you have to be very, very careful, especially at a time like right now. So number 2, it's super obvious, and most people are going to say, I know this, Brandon, but let me elaborate a little bit. Number 2 is you don't know what you own. And you're like, I know that. I know that I need to know what I own. But if I go to any of you guys, just look at your portfolio and look at something that you have a decent holding in, not like an ETF, but an individual company. Maybe you own Palantir, we'll just say. Explain to me, like I'm a 12-year-old, what Palantir does, how they make money, why you think it's a good value proposition, and why you think that getting in right now is a good price, a good value for your money, and your thesis on that company going forward, whether it be their revenue growth, their earnings per share growth, their moat, meaning do they have a durable competitive advantage? Do they have pricing power? How does it look for the competition? Do they pretty much have everything dominated right now, which maybe they do, but how does that look 3, 4, 5 years down the road from right now? Most people will say, "Oh, I bought Palantir stock simply because there's momentum and it's going up." And I say, I get it. Like, I'm happy that you made money, but it doesn't make you right that you made money on a stock. Simply because the stock went up and you made money, that does not make you right. I know I kind of just said that twice, but people need to understand that. Also, if you buy a stock and it goes down, it doesn't necessarily make you wrong. It just might mean that you need to let things play out a little bit longer. You might need to be a little bit more patient because maybe there's some overall macro effect happening in the market where it's bringing down the Nasdaq and the S&P, and then your stock is coming down with it because oftentimes in the market all boats rise with the tide and go out with the tide too. So, I just see a lot of people on X, a lot of people on YouTube just posting their wins right now, and of course, I'm happy for everybody. Here I am showing my account. Like, I get it. But understand that just because the market's going up, it doesn't mean it's going to keep going up. The last few years for the S&P and the Nasdaq have been phenomenal. It's been above trend growth for the last few years. But that doesn't mean the next couple years going forward is going to be like that. And there's this funny story of this guy that was in my Discord a while ago. When the market was ripping coming into 2025, still going straight up before the tariff stuff, he said, "Oh man, what do you think about buying calls on Triple Q and whatever it is? And I'm going to do a HELOC on my house to pay for it. Home equity line of credit, basically just taking a loan against your house." And I'm like, dude, you are insane right now. Like, at a time that the market just ripped higher, when valuations are a little bit lofty, here you are about to FOMO the top. And I tried to warn him not to do it. And again, maybe the market would have kept going up higher. Maybe he would have been right. But I know that you guys work hard for your money. I work hard for my money. I am not going to take on this astronomical risk of flipping a coin on a HELOC on my house to hopefully make money on a call option. Like, people wonder why they're stuck in that 100K cycle, that sub 100K cycle, because they do stupid stuff like this. And it's simply because they're buying something simply because it's just going up in share price. They don't know what they own. Most people don't know what they own. Every single company that I own, I know who the CEO is. I know the thesis on the company. I could explain it to a 12-year-old. I could tell you the valuation level, the growth prospects, the competition, the good, the bad, the ugly, whatever it may be. I read all the financial statements. I go through the earnings calls. If you don't do that stuff on an individual company, are you really an informed investor, or are you a speculator just hoping that the price is simply going to go up? Only you know that for sure. You could sit here and say you do all your own research and stuff, but look at yourself in the mirror and really understand, are you buying because the price is going up, or are you buying simply because you don't really know why you're buying? And that's what most people do. Now, without dragging this video out too long, I want to talk about number 3. Now, when I say it, and I mean this, like, this is the hands down number one thing that wipes most people out in the investing world, in the stock market, really in business. Like, any decision, if you make it with this state of mind, it's probably going to be a bad decision. Not always, but most of the time. So before you click off this video, once I tell you, let me explain it a little bit. And it's your emotions. You're going to be like, "Brandon, this isn't like psychology class. We don't have to talk about 12-year-old girl emotions." But think about it. How many times have you gotten emotional when the market went up? Your neighbor's making money, your colleagues at work are making money, but you are not making money with them. You're like, "Dang it, like, I wish I bought this stock." They show you how they double their money. And then here you are going on your brokerage account and buying call options with too big of a percent of your account versus what you should do. You FOMO the top, the stock falls, and you're like, "Dang it, I suck. I timed it perfectly wrong." I'm sure it's happened to you guys. It's happened to me before. We've all done it. Don't feel bad. But the key is to learn from it. The key is to not make these mistakes time and time again. Now, how many of you guys, when the market falls, like, we could just talk about April when the market took that dip, how many of you guys were freaking out when the market took the dip in April? I personally didn't really care because I knew that at a time when the market was a little bit rich coming into April, meaning a little bit expensive, I did a little bit of de-risking, not saying I could time the market perfectly, but I knew that statistically speaking, it made sense to not be over leveraged coming into 2025. So I allocated myself appropriately. The market dipped, I capitalized a little bit on a bottom, and I came out ahead. Now, most people on the bottom of April, they were freaking out, they were panicking, they were getting emotional, they were getting margin calls. The broker was calling them saying, "Yo, you got to send more money to us or we're going to close out your accounts at a loss." I was going in countless spaces on X, like, the live chat rooms on X, just listening to what high profile people were talking about. I was in spaces with Peter Schiff, he's the big gold guy that talks about how everything else is bad. Just there's countless big dogs, that I was in spaces with chatting with saying, the dollar's going to lose its world reserve currency, the USA is done, China doesn't care about us, what they're going to take over, like all this crazy stuff. And now, just a few short months later, the market's ripping to all-time highs, and pretty much everybody was wrong that was calling for all that. At least wrong to this date. I mean, maybe the market's going to fall from here, who knows? But my point is, it's very obvious. Just be a spectator in a market, not a speculator, a spectator. Watch what people say on X and YouTube when the market's going up. Then watch what they say when the market's going down. Watch how all the sentiment's going to be negative when the market's going down, and watch how all the sentiment's going to be bullish when the market's going up. Let's just pick on United Health for a second. You guys know that I've had United Health exposure for a little bit now since this dip, and the sentiment was horrible. It was like, oh my God, costs are going up. How are they going to ever return to profitability? Are they ever going to be able to raise their prices enough to really get back to their earnings per share growth? Maybe this, DOJ lawsuit is going to be much worse than expected. And then all of a sudden, Warren Buffett bought the stock and everybody's like, oh yeah, it's all good now. But it's like, did anything really change fundamentally after Warren Buffett bought? No. But it's like, why were you not thinking like Warren when Warren was thinking like Warren? Like, why were you not thinking to buy maybe when things are on sale? Instead, you were panicking when things are on sale. And as Warren Buffett says time and time again, be greedy when other people are fearful. And United Health is an example where I'm not saying what exact exposure I have to it. I am just saying that the stock is down, or it was down roughly 50% from all-time highs. And many people will view that as an emotional decision that was, overblown by pushing the stock down that far. So to recap real quick, if you're stuck in a sub 100K cycle, it's probably because you're making mistakes that I outlined in this video right here. You probably don't know what you own. You're probably getting emotional with things that you buy and sell. Please don't do that. Look at yourself in the mirror and understand that you're not going to be like every other person out there in the world. You understand that most people underperform the S&P 500 in the long term. Like, I'm talking people that are trying to outperform the S&P. Typically, they underperform the S&P. So when you understand that, you're going to realize that maybe the majority of people actually suck at investing, and maybe I shouldn't do that. I kind of am in that camp right there. So that's why here I am making YouTube videos trying to help you guys out and trying to help you guys realize that I'm 32 years old as a regular guy that scaled to 1.2 mil just in this brokerage account. I have a few other brokerage accounts. I have some rental properties, and I'm just here to show people that it can be done, and I'm not some guy that inherited a bunch of money. I started this from nothing, and I just want to show you that you could do it too. So if you got value from this video, please drop a like, drop a subscribe. If you want to talk about anything, comment below. I try to respond to every single comment, and I'll see you guys in the next video.